Okay, Chris, I want to get over or going over your questions and everything. Are you good for me to kind of go through the training today and then hit yours after?
Yeah, that's fine.
You're good on time? Okay.
Yeah.
All right, because what we're going to train on is going to kind of lead straight into the questions that you're asking anyway.
Okay.
Okay, and then, all right, guys, so as we go through today's training, I need a couple volunteers. And by volunteers, meaning I'm going to pick you to roll with me on this. And Tony and Ty, since you guys were the first ones that gave the thumbs up on the post, it's you guys today. Okay, so it'll be good though, guys. So there's no, I get, guys, that we're going to kind of be venturing into a discussion here. A lot of us, we just haven't had a lot of training on. Right? Like when we look at the numbers and you stare at these reports from your accountants or your bookkeeper or whatever, we have not had a lot of training on these things, right? It's a completely different language to a lot of us. Can some of you agree with that? Right? You get these reports and you're like, what the hell does all this mean? Like, because it's not making any sense to me. So that's what I wanted to cover today. And I thought it'd be helpful for us to go through that. For some of you, this may seem pretty simple. For some of you, might be really eye-opening like it was for me. Okay, so let me get my screen here set up. And then we'll get rolling through it. People coming in here.
I'll go get mine.
Okay. All right. Can everybody see my screen okay?
Yep.
All right, perfect. So what we're going to be talking about today, guys, is really the language of business. Okay. This is key stuff for all of you to understand in order, if you want to be successful long-term. Like I get some of you are probably frustrated because we're going through entity structure and design, trying to match up all these different things. I have empathy for you, but I don't have sympathy for you, because the reality is if this stuff is not put together long-term, you will fail. It is absolutely inevitable. You will not build something if you don't understand the language of business. And I have this quote here right off the bat because I want us to all stay focused. And it says, if you cannot measure your results, you will either continue to struggle or you will fail because key information goes undetected. Now, Ty, what's been your experience with that?
Well, we just struggled. We work our butts off, and at the end of the day, we aren't as far ahead as we should be.
Yep.
So.
Okay. Tony, how about you?
Yeah, same. Harder. It feels like the harder we work, the further behind we get.
Yep. No, absolutely agree. So the first question we're going to roll into is, what is the language of business? Like, Tony, how would you define the language of business? And again, guys, there's no dumb answers here because nobody else on the call is probably going to know or have a better guess than you.
The language of business, I guess I would define as, I'm trying to think of the terms that my tax accountant person uses, but just being able to know everything about your business and how it all works together.
Okay. And if you had to put it into one word, what would you say?
Numbers.
Okay. So numbers or accounting, right?
Yeah.
I mean, that's the language of business, right? Is understanding how all of these numbers are fitting together on all these different forms that we get. Now, the next thing we need to go over is what's the difference between bookkeeping and accounting? Ty, I'll let you and Tabby answer that one if you want to.
Bookkeeping is just entering it into a spreadsheet or into whatever. Accounting is making sure everything meshes, everything flows, knowing, I guess, being able to keep things organized. I don't know.
Yep. No, I mean, that's pretty close. I mean, honestly, so bookkeeping is the activity of recording financial transactions, right? Accounting is the process of converting financial transactions and reporting them on financial report cards. Okay, pretty simple. Majority of business owners, though, do you guys think they can actually tell you the difference between bookkeeping and accounting?
No.
No.
I couldn't. Go ahead.
I've always had, those two things absolutely. I mean, bookkeeping, I looked at like as entering that stuff in and getting your managing decision, and accounting was getting that stuff into the books.
Yep.
But,
yeah, it's kind of backwards, huh? Or at least it seems like it, for sure. Yeah. So, okay, now when we're looking at just straight accounting, okay, there's 3 financial report cards for every business. Okay, financial report cards. Tony, what do you think they are?
balance sheet, profit and loss statement, and cash flow, maybe.
Perfect. Awesome. I'm actually like, great job. Because you could ask me that question. I'm like, I don't know. What do you right in between?
Do I get an A on my report card then?
I'm gonna send you a gift. It's kind of key critical things to look at, right? Because when we looked at these things before, all of you guys know what a balance sheet is. Not very many of you know what a statement of cash flows is, which is what we're going to go over. Not very many of you can explain the difference between income statement and statement of cash flows, right? But all these things work in tandem. The problem is that when we have our accountants going through and doing our bookkeeping or whatever, and they hand us these reports and we ask specific questions, what type of response do you guys think we typically get? Well, we debited this, we credited that, and then we did some reconciliation, and then we added this in, and then everything just magically matched up. Right? Like I need to know every decision that I make inside of my business. Mentally, I need to know, okay, this is going to be impacting the balance sheet. This one's going to be impacting the income statement. This one's going to be impacting the cash flow statement because they all work in tandem together. Make sense? Okay. Now, so Tony hit it right on the head, right? Balance sheet is number 1, income statement 2, cash flow statement is number 3. Now on the balance sheet, I like to break things down as just simple as possible. Okay. So a balance sheet keeps track of your things and stuff, whether you own or own those things or stuff. Okay. So assets, things and stuff. We have cash, we have accounts receivable, inventory, property, equipment, all the things that you guys have on your stuff. And then liabilities, accounts payable, taxes payable, and all your notes payable. And then equity is your owner investment, earnings. So got more people coming in here. Earnings, your current, earnings retained, and shareholder distributions. So when we're looking at earnings for that, and it has that dash there and it says current. Ty, what do you think that means?
That is for the current year, what your profitability is.
Okay. So current period though, right? So whatever, what's the definition of an accounting period?
Quarterly.
It could be monthly, it could be quarterly, it could be annually, whatever you guys are using to measure, right? So, but then we have earnings down here called retained. What does that mean?
Is that carryover earnings?
Yeah. So if I was just doing a monthly balance sheet here, okay, which is what all of you guys are doing now, every single month going through and updating numbers. When we get our income statement, right? If I wanted to look at my current earnings for that month, that's going to show up right here on this balance sheet, right? And then the current or the retained earnings from the past 4 months, say we're in May or something, they're going to show up under that retained section right there. Okay. And then shareholder distributions, what is that one?
That is the money left over from the earnings that you got to pay out to the shareholders.
Okay. So when this is why this is relevant to you guys, okay? Because all of you guys are working on getting an entity structure and everything set up. Okay, so for me, Ty, I have Legacy Farmer, right, as one of my active businesses, and I have Young Enterprises as my holding company. When I transfer money, right, from Legacy Farmer to Young Enterprises to pay myself my salary out of Young Enterprises, what is that technically classified as?
Shareholder distributions.
Shareholder distribution, right? Where is that? Which statements is that going to impact?
Your cash flow and your profit loss, your income statement.
Okay, why would it impact your income statement?
Because isn't that part of your
Outflows.
I'm drawing a blank now.
Fine. No, that's fine. So it is a part of your cash flow statement, right? But the income statement is strictly income and expenses. Is a shareholder distribution, is that really an expense?
Probably not.
Okay, no, it's not. Like it's literally shown on your cash flow statement, right? And then from your cash flow statement, now it shows up on your balance sheet as well. Okay, but when I'm selling grain or you guys are selling cattle like you guys did at your bull sale the other week, that's all shown up on what statements is that impacting? What financial report cards?
Well, our cash flow and our balance sheet mostly.
Okay. But are you selling a product and taking income?
Yeah.
Income statement.
right? So
Yeah, all of them then.
it's impacting all three.
Yeah.
Right. So you see how, guys, when we start thinking about every transaction we're making, it is impacting the statements differently. It's causing a shift. Okay. So when you sell your bulls, that's going to be shown on your income statement. It's also going to be shown on your cash flow statement. Why?
Because it's inflows.
Go ahead, Ty.
Yeah, because it's money coming in. It's you're selling your product.
Yep. So it's technically income.
Yeah.
But then why is it show up on your cash flow statement though too?
Because that's what is flowing in and out of your account. It's the money coming in. Yeah.
So
Your
your cash flow statement is nothing but a reflection of your bank statement.
Yeah.
What came in for the month, what went out for the month. Okay, and all of these transactions, guys, they are impacting the balance sheet in one way or another. If we advance money on our operating line of credit, for example, okay, which statements is that going to impact?
Come on.
cash flow.
1,
Well, who's got that?
2, 3, 4, 5.
Okay, say that again, Ty.
Cash flow.
Okay, and what else?
I forgot what the question
What
was.
was the question?
If you're advancing on your operating line of credit, which ones is it going to impact?
Oh, your balance sheet and your cash flow.
Right, because the money's coming into our account.
Yep.
Right? But then it's also, we have our liabilities right here. What we
Yep.
owe is increasing over there.
Yep.
Right, because now we have debt piling up there. So again, guys, just like making sense here. Why is it not considered income? Why is it not shown on your income statement?
Because, well, it's just borrowed money. It's not owned money.
Yeah, exactly. Right. So it shows up on the cash flow statement because the money's coming into our account, but it's not going to show up on the income statement because we didn't sell a product.
Yeah.
Right. Okay. So moving into the next statement here is we have the income statement. Okay. So we just went over our balance sheet. Now we're moving on to the income statement. Now, again, here, you can see the period up here. I have 12/1/19 to 12/31/19. Okay. So periods, again, guys, this could be a quarterly income statement. This could be an annual income statement. We get all the way down to the bottom here of just a monthly income statement. Okay. Now, here's where a lot of people get confused with it. At least I did in the beginning. Sometimes accountants call this report card an income statement. Other times they call it a profit and loss statement, a P&L, a statement of operations. These are all the same. Okay. So if you have an accountant that's calling it one of the other names or whatever it may be, these are all the exact same. Okay. So income statement, pretty simple, right? It's going to record the revenue or sales activities of the business along with the expenses, costs incurred to produce that revenue. Okay. Pretty simple there, right? Now we're looking for specific costs that occurred in order to produce specific revenue during a specific time period. Again, months, quarters, or years. If the revenue exceeds the costs, what just happened? Everybody still got me?
Yeah.
Yeah.
Okay. I think I froze up.
Yes.
Okay. If the revenues exceed the cost, then there's a profit or earnings, right? If costs exceed revenue, then there's a loss. Either way, whether it's a profit or loss, it's commonly referred to as the bottom line down there. Okay. So do we understand the difference between an income statement and a cash flow statement?
Yeah.
Okay. Do we also understand how an income statement is going to impact the balance sheet?
Yes.
Okay. Because if I'm selling a product, for example, and I record revenue, all these bulls that you guys sold, how does that transaction impact your balance sheet?
Well, it takes the bulls off your balance sheet and it either transfers it into cash or pays down your liabilities and your current liabilities. And
exactly. Right. You can sell it, have a bunch of cash in the account, and that can show up on your balance sheet as cash in the account, or you pay down your operating line of credit, it shows up on that side.
Yep.
Right. So every financial decision you guys make, it's going to have an impact on one of these statements. Okay. And understanding how they all flow together and just kind of being able to wrap your head around this stuff is going to start changing how you make decisions within the business.
How often should we do an income statement? I mean, my income is once or twice a year. Is that something that we should do for a 12-month period?
Yeah, but your expenses are how often a year?
5 times a day. I mean, monthly.
Exactly. So that's why we focus on, we're doing this monthly, like
Okay.
non-income statement, cash flow statement, update balance sheet. That's why I have you guys like farmer metrics, which we'll kind of go into a different training on that next week behind 2 types of books that you're keeping. Okay, farmer metrics, that's why we do that. We're updating the balance sheet, and you look at like this page right here, we have assets, liabilities, and equity. On farmer metrics, this is exactly what the loan analysis page looks like. Only thing that we're adding in there is that we're looking at how your overall leverage position is with the bank, and how those things are impacted. Is there any other questions and stuff that are coming up over this? Guys, again, there's no dumb questions, so please ask if you have any.
Jace, I got one.
Yep.
On our balance sheet and stuff, you know, when we update those, we lose the information of our farmer metrics. Should we save it monthly so we can see trends?
Yep. I think that'd be wise, right? So just go up there and just do file, make a copy, and then
Okay.
farmer metrics for the individual months throughout the year.
Okay.
So that's what I would definitely do, because we haven't even gotten into trends, right? And noticing how things are shifting throughout the year. Because you'll notice, especially with some of you guys in the sizable operations you're running, your leverage position with the bank, it's going to shift pretty dramatically throughout the year. Some months it'll be great because you got all this grain sitting in inventory, right? And then other months it's going to be like nothing, you know, there's nothing but expenses going out and your operating line of credit is just shooting up, right? And the value of your crop isn't fully there yet. Right. So those are those things to pay attention to as well. Tater, did you have something?
Oh, no. I just this is really good. I think going through some of these theories, and I know it's probably in our training deal, but as a group here and talking it through is good.
Yeah, no, this will be in the training now. I just would rather go through it and have like the questions and people connecting on the call and asking questions, and then we'll put this into the training. Okay, so moving on with the income statement, the next thing we need to talk about is cash flow statement. Okay, again, the cash flow statement, notice the time period up here, 12/1/19 to 12/31/19. Again, you can use any period for the cash flow statement. Okay, and inside of your cash flow statement, all it's doing is reporting the cash inflows and cash outflows of cash during a specific accounting period. Now we have 3 different types of cash flow. Okay, we have operating cash flow, investing cash flow, and financing cash flow. So, Tony, what do you think operating cash flow is?
The money that you're operating with. I would think it would be, just the money that you're operating with.
Okay, so where's that money coming from, though?
Well, either operating line, or if your income that you've generated, depending on how you operate.
Okay. So operating, I'm happy you said that. So operating is straight from income. Okay. Some of you guys, you don't have operating line of credits. You operate straight off of cash. That's considered operating cash flow. Okay. Tater, what you were talking about, when we're advancing on our operating line, means we're using financing cash flow. Right. Money's coming in from the bank. We have financing cash flow coming in so that we can operate our business. Operating cash flow, again, guys, is straight profit. We're operating off of our own cash. We don't need anything from anybody else, which is ultimately where we all want to be.
It's where I need to be.
I get it.
Damn banks.
But we can't get there unless we know the numbers, right? Unless we're tracking these things and measuring these things. Okay. Investing cash flow. Ty, what do you think that is?
It's the money you have in other investments, like say if you're in real estate investing or something like that, that it's a secondary source of income and expense.
Okay. So from a personal perspective, yeah, I could see that. Okay. But when it comes to our business though, investing cash flow is cash that we get from who?
Someone else.
An investor.
Investors, right? So like FBN, for example, they just went through, like it was a few months ago, went through like their Series F round, and they got another $200 million from their investors out in California. Right. So now they're going in, they're using that money to make more money. And in return, they're having to pay back their investors. Right. They either pay them in a dividend or they're paying all their money back. Okay. Whatever their agreement is with their investors. Make sense? Okay. So that one's not really going to be relevant to a lot of us on this call. Okay. But the financing and the operating cash flow is going to be relevant to all of us. And we need to be paying attention and watching out for those things. So let's see here. Cash source, first time operating cash. Yeah. So operating cash flow, Tony, back to what we were talking about, is generated from sales or by collecting accounts receivable and can be used to pay expenses. Okay. So again, every single month, am I selling enough grain to show a profit that month to where I have excess profit and can use that to pay my expenses and run my business the following month without needing an operating line of credit? Now, what's crazy, guys, is back in 2012, when we had these huge prices come up, right, and everybody's making money like crazy. Do you think anybody needed financing cash flow anymore? No, we had guys clearing off their line of credits in 1 year. They didn't need any of it anymore, which is when what happens there? What are the banks going to start doing, Ty? What do you think?
Dropping their interest rates.
And we're going to get really greedy because the banks still need to be making money. And all of a sudden, you know, tens of millions of dollars in operating loans were cleared off because of higher prices. And now we need to start making loans again. So who can we get to borrow some money?
Yeah.
Or some purchases we can help them with.
Putting up buildings.
Yeah.
And shit like that.
Putting up buildings and stuff like that with living quarters that are not getting used today. I promise you. Or they may be getting used because of the stress and they're not, the guy's not. Okay, so
He should.
that second type is investing cash flow, right? Which can be generated by selling certain assets, can be used to buy certain assets, real estate or a piece of machinery. Third type is financing cash flow, which can be generated by borrowing money from the bank, which is where all of you guys are at for the most part. Okay, now the next thing I want to cover is just kind of our perception on these three documents here. Okay, and the way that I was trained to kind of think about these is your income statement and your cash flow statement. They're both kind of like movies. Okay, whereas the balance sheet, it's really the snapshot of the movie. It's a snapshot in time of the movie. Now, like Tony, what is that? Does that make sense to you? I guess, how would you describe these things?
Yeah, it makes sense. It's just a generalization
Yeah.
of the two documents.
Yeah. So the income statement is a movie of the income and expenses that we have over a certain month, over a certain quarter, or over the year. Same with the cash flow statement. All right. Cash flow statement is going to show us money came into our account and left our account over the quarter or over the year. The balance sheet, though, it's going to show us exactly where we are at in a moment in time. Okay, of that movie. So it's either end of month, end of year, whatever it may be. Okay, the whole value and why I push you guys to be updating things on a monthly basis is so that we are keeping track of your overall financial position with the bank on a month-to-month basis. And in order to do that, we have to update your balance sheet every single month. Because it's going to be the income statement and the cash flow statement. It's easy to get these things. These things can get mixed up really easily, especially with you guys that are advancing a lot on your operating line of credits. You can drastically screw these things up. Okay, there's a lot of differences between the income statement and the cash flow statement. Okay, but the balance sheet, though, that's that one single place where all of this information is flowing together into one single spot. This is why. No idea what's going on with my internet today. This is why we update this on a monthly basis. So we are getting that snapshot from month to month to month. Okay. Does that make sense?
Yep.
Okay. The other thing here too, guys, is as you guys get in the habit of going through and updating your farmer metrics and everything, I want to get you guys in the habit of updating your bank on a month to month to month basis. Because how many other farmers and ranchers in the bank right now do you think are updating their banker on a monthly basis?
Very many.
Like less than 2% probably. And then the bank is sitting here wondering.
Yeah.
All right. So we're just building in these good habits of making sure that we're the ones on our end being proactive. And the bank knows that we're updating these things. They know that we're keeping track of these things. Okay. And I've told some of you this on other calls, but when the bank, they're going to be busy through renewal season, which is going to end in about May. And then Tony, what do you think the banks are going to do?
Take a break.
Yeah, worked hard for 5 months and now we're taking a break, which is honestly about what happens. You sit there, you look at the clock on your screen, you sit there till 5 p.m. Like, and you're looking for the show The Office. For any of you who have seen it, that's Banks when it's boring out. Like it's great. It's a great definition of what actually happens. Okay. So what I want to do though, is that when banks have their weekly loan committee meeting, which they all do once a week, I want them talking about you guys. Maybe it's September, they don't have anything going on, and the first thing that they can talk about is, hey, yeah, Ty and Tabby just sent over their monthly update. Like, it looks super solid right now. I want them talking about you guys when they don't have anything else to talk about. That way they're building up good information on you guys.
So you want us doing that even if we're not looking really totally solid? I mean, I'm embarrassed to say that, but like, to just be upfront with them and say, hey, here's where I'm at, struggling, but I'm working on it. I'm getting organized, getting better.
Okay. If you're more proactive in letting them know when things aren't going good, do you think they're going to be more proactive to help you out?
Yeah.
Probably, rather than when stuff's not going good, waiting 5 months, and then they update your balance sheet and they're like, Tony, we don't know if we should renew you or not. You knew this 5 months ago and now you're telling us you didn't know that. Like, think about it like with your kids or something, right? If your kids do something and they don't tell you about it for 5 months and they knew it, you'd be pretty pissed, right? Okay, David, go ahead.
I actually have two questions. Okay. One is, so back in college, we went through financial statements, and kind of the question is, we all know how important they are, but how many of us really do a good job of keeping them up to date? I do not. And then two, a little bit in regards to this, essentially your financial statements, bookkeeping, the whole 9 yards is, I used to enjoy it, and maybe other people are hopefully in the same boat, but I no longer enjoy the drudge of this bookkeeping, bookkeeping and keeping all that stuff up to date, but it's absolutely vital. And so do any of you other members use a service to do your bookkeeping and your accounting, and so that you get maybe this report on a weekly basis, and then at the end of the month, you sit down and review your month? I just know, like, I seriously want to shoot myself in the kneecap on a daily basis going to the office. I no longer enjoy that. And I want to find somebody that does enjoy that, and then I'll go do the things I'm good at. But does anybody else feel that way?
I have my opinion, but I'll let somebody else speak up and share their point of view.
I've tried it, but it generated more work because that person that was doing it wasn't really on the field, so to speak, and they didn't understand my processes. So at the end, it took me twice as much work to correct it all. At the end, it's just easier to do it myself.
Okay. Do you think, Tony, there was any problems with mixing personal and business expenses, or running multiple sources of revenue through one business and multiple sources of expenses through one business? Do you think that all added to the chaos?
Absolutely. At the end of the day on QuickBooks, 90% of her entries on QuickBooks were under the category Ask My Accountant.
Yeah.
Yeah. So I had to go back and just basically do it all over again.
So guys, like, this is the reason. Okay. So for all of your guys' entities, yes, it seems like a pain in the ass. It seems like a lot of legwork. Totally get it. Totally get it. Some of you might be frustrated around it, but all of it is trying to get you guys to the point to where this stuff is stupid simple, where we can understand where things are coming from. Because each one of these entities now, it's going to have its own movie. And inside of its own movie, it's going to have its own snapshots. And we have detailed numbers on every one of the businesses. A lot of you guys, you come in here and it's the first time you've done cash flow projections on any of your entities or separated out any of your businesses. And some of you're like, holy shit, I'm losing a ton of money on cattle, or I'm losing a ton of money on my farming, and I need to switch these things right now. Right. But before that never happened. Never happened. All right, John, go ahead. Get you unmuted there.
You got me, Jace?
Yep.
Okay. One thing that I've noticed is when we dread, if we get these things cleaned up, is we all dread dealing with this, and it takes so much time. But in all reality, maybe it tells the story and tells on us a little bit on exactly what you just said. Maybe the cattle are losing money, but by gosh, we're gonna load the freaking pins up, and we're gonna stay in that part of the business because it's more about identity rather than profitability. And I know when Holly and I, the same thing you guys were saying, our accountant, every time I would go look through, I mean, she would have our stuff in the wrong spot. And so I end up having to go back and do it again. And that's why Holly and I started her bookkeeping service, because for my clients that are in ag enterprises, it's really easy. She understands my business, and we're able to kind of clean that part of it up for them. But once we get our cash flows, our balance sheets, we understand what these reports are, and we start to put them into use, and they're clean, it kind of gets a little bit easier every month, and it doesn't seem like such a dread. I hate whenever you're losing money and you're bleeding at every aspect of your life. You hate to go look at that statement, because all it's going to tell you is you're a loser, and you don't want to see that. But it gives us an opportunity to make those changes now. And that, honestly, that's what drove me to wanting to be part of Legacy Farmer was that aspect. So,
And some of you guys too, it goes back to like what Tony said. Tony asked, well, do we update them when things don't look good? That's like kind of where the ego comes in for us and the pride comes in for us, because we don't want to really, that's like why we avoid the numbers too, half of you. So to go back to like David's point here, in my opinion, okay, and this is just my opinion, take it for what it's worth, you will fail as a business owner if you don't understand this stuff first before passing it on to a bookkeeping service to do it for you. Unless you guys know this stuff, guarantee you one freaking thing. You guys will not look at the monthly, or most of you do not have the discipline to look at the monthly reports. Big part of the reason is because you don't even know what they mean, because we haven't been through training like this before, right? But that's like, you guys will be massively busy. Get into the middle of harvest right now, or Ty's out calving at 2 a.m. in the morning and taking care of that. You think he wants to go in and he's going to look at the reports that the bookkeeper just sent over? No, not going to happen. So until you're qualified, until you've been through this enough and you have your own system and you understand how the numbers flow and you understand your habits and what income is coming in, what expenses are coming in, like you guys going through and putting together your cash flow projections, you're going to learn so much about yourself. Like, and how, honestly, this first year, how far off you are on your numbers. And you will get so much better as the years go on. And then, yes, in a year or two, hire a bookkeeping service to come in and do your books for you. Reason is because when you look at the statements at the end of every month that they send over to you, you're going to know what they mean. And you're going to be able to pinpoint things because you've learned your habits. But you got to spend some time walking through that fire a little bit, learning the numbers, going into the weeds, doing the unsexy stuff, David, that 99% of other business owners in general are not willing to do. And then that's kind of where it becomes simple, guys, because you're able to remove all your emotional ties to parts of the business that aren't working, because you know the numbers. It's become straight logical to you. It's like, hey, this is working, push this button here. This isn't working, push this button here. Instead of wandering around half the year thinking, shit, I know what my break even is on my crop. I know that I advanced on the operating line. I know I have this massive interest payment coming up, and I honestly don't know if I'm going to be able to make it. But you just have a general idea. You have no idea what the numbers are. All right, anybody experienced that before? Yeah, you know shit's not good, but you don't know how to figure out exactly what the numbers are so you can pinpoint which buttons to push to fix the problem. Because like for you guys coming in here, so I have what's called a sales funnel set up, right? In the sales funnel, there's a Facebook ad. The Facebook ad goes to a landing page to a video to an application to a phone call. And then we have, the phone calls happening. But that's a funnel, right? That's like a set of doors that people are walking through on their way into Legacy Farmer. I have specific metrics on every part of that funnel, where if one number is not within KPI, key performance indicator, if it's not within KPI, I know what I need to change. What do you guys think Farmer Metrics is?
Same thing.
It's the KPIs, it's the critical indicators. At the end of the day, your bank can talk about, oh, we like to see this debt to asset ratio. Oh, really? Do you? Yes, please tell me why you actually want to see that. The majority of bankers, they will not be able to explain to you why they're even asking for that. Okay, but at the end of the day, two key critical numbers that matter: overall cash flow, right, and leverage position with the bank. That is why we built that. Because out of the end, those are the two key critical things there that we're paying attention to. Okay, but we have to understand how our decisions across the income statement, the balance sheet, and the cash flow statement, because it's those decisions that we make that are shown on those statements throughout the year that ultimately impact our position with the bank. And we have to understand how they all work together. And when I make one financial decision, okay, great, how's this going to impact my balance sheet? How's this going to impact my cash flow statement? How's this going to impact my income statement? Okay, makes sense? Yep. Okay, Tater, what's kind of coming up for you as we go through all this? Oh, let me get you unmuted here.
What's really been interesting for me and going through this is, we're talking about bringing someone in and all that kind of stuff. And with my wife stepping away from the business, I've had to do all this stuff that I never intended to do. I mean, I look back in all my years of being a salesman, I just drug stuff in and dropped it off and said, fix it. I'm killing bringing you sales. I'm the revenue generator. And so I just went along that whole time not knowing. And so I've actually brought someone in to help me get my books square from where they were, because we were doing a lot of things wrong. And what's been really key is I keep going in and visiting that I don't want you to do it for me. I want you to teach me along with you to go in and figure this out, because she's really good at inputting, she's fast. I said, I don't care how fast you are. I got to put it in. I got to feel the pain. And that has been so powerful to me, to feel the pain. And we are getting things ready to input into the Farmers Metrics system, because we had so much stuff to clean up. But it has been huge, and that's partly why I've just been so all over the place with everything else, because I'm learning this thing really, really well now, and it's coming together. And it's scary, that identity thing that Jonathan talked about. I am in the feed business, and I kind of am stuck in the feed business, and I'm looking for every opportunity to kind of step away from that. But it's kind of been part of what I had to do. And I'm trying to figure out where those numbers are to where I can exit that if I can, or what, how that works.
Yeah. And guys too, I would say, some of you guys, you probably have great accountants. They probably understand how all these things flow together and work really well together. But what's the biggest difference there, Tater?
Oh, if I don't feel the pain, if I don't put the number in and see the red and know that the red actually means the red, or it means the positive, when I don't feel that pain, it's not real, right? I can just hide, well, that's the accountant's problem, that's not mine. When all reality, it's all my problem. And it's either my success or my failure.
Okay, the other piece that I'll add there too, guys, is we all know somebody in our life that's really good at doing something. It may be an athlete or whatever, it could be anything, right? But there's a difference between taking action on something and doing it versus teaching somebody else how to do it too, and being able to explain it in terms that they can wrap their head around it and understand, right? And that's where I've learned from you guys the most is it's helped me become a better teacher. And because I got to put myself into your guys' mindsets and think, okay, where are they at? Are they at level 7? Are they at level 2? Are they at level 3? Where does the training need to go? How do I need to get these people moving forward and do it in a way to where it all makes sense, right? And that's why we have power, production, profit, protection. I had to come up with frameworks and containers to put each one of these steps in to lead you guys through. Okay. David, go ahead.
Like we use PC Mars is what I'll say our basic software. So as everybody else, what softwares do you use and do you like to be, my 2 cents worth on PC Mars is that it's old and antiquated and it isn't very efficient, which makes me less efficient, which irritates me more and makes me dislike the office even more. And so as a whole, who do you all use? And does it seem to help you be more efficient? Now, that's a sufficiently great question, and so I suspect great answers, but anything's better than what I've got, I think.
Does anybody have any comments or insights there? Chris, go ahead. I'll get you unmuted here.
I use QuickBooks, and there's a lot of different ways that you can set up rules and different things so that when a transaction comes through, it'll just automatically categorize it for you, and you don't have to mess with every single transaction. Like that helps me. It helps with the farm, but my boat business is far more complicated as far as all the different sorts of transactions. And I can, like when we have a deposit from Square come in, I can link the QuickBooks and the Square together, and it'll automatically categorize each sale as what it's supposed to be. And there's some things I don't like about QuickBooks, but as far as efficiency and simplicity, there's a lot of things you can do with it that'll simplify everything and just do everything automatically. So you can just go in and double check everything and click confirm and be done.
Yep.
Yeah.
So, does that help, David?
Yeah, and I've heard QuickBooks is, a pretty reasonable product, and that's kind of essentially where I'm at right now. Is that PC Mars is an enormous pain in my butt. It's not very fluid and flexible for the way our partnership does things, and it just makes me tremendously inefficient. And essentially, that's a little bit of why I just dislike our office at this point in my life, is that it is tremendously inefficient, and I've got to come up with something other. Like I'm willing to make a bad decision just to try something else. And so I'm hoping to, like I said, get some information from everybody else of what they're using, and if it's granted, if you don't have anything to gauge it against, that's one thing. But if they've been at one product and went to QuickBooks and it's been helpful, then that's got me leaning more towards going that route.
And with a lot of you guys too, I'll say this: like some of you guys, you'll have to build out your own type of custom method for your numbers. Okay, so we'll talk about this next week. But I wanted to go over 2 different sets of books, right? So there's 2 different sets of books that you guys need to keep. There's the government's books, right, you're paying taxes to, but then there's also your business books. Okay, farmer metrics for you guys, that's your books. That cash flow statement, your cash flow projections, that's your books. Okay, it's a different statement. It's not the income statement. It's not the cash flow statement. It's a mixture of both of them. Okay, but ultimately it's going to tell you what your operating line of credit balance is and things like that. So you need to understand for each individual business that you have here, there may be a different level of accounting system required. Okay, so like Chris, for example, getting in Square payments and those types of things, that's a different set of books. That may require different software or whatever it is. All our payments are run through Stripe, right? But then we also have wires coming in. We have checks coming in. Okay, so you have to determine here, what type of system you're going to have to build out. And there's also, once we get a lot of you guys lined up with this stuff, there's going to be some key, just critical numbers you need to know for yourself internally. Okay, and like key critical numbers to help keep you out of scarcity. Okay, because some of you guys can be in absolute great financial positions, still stuck in scarcity. Still wake up feeling like you don't have very much. Anybody feel that way ever? Yeah. Okay. Like Paul and Lindsay, I remember you guys talking about paying off $50,000 worth of debt last year. Great accomplishment. Does that wipe away the scarcity? No, not even close. right? So it doesn't matter, but so there's critical numbers too. So for me, like in order to help keep me out of scarcity and keep me focused on where I'm going, I want to know how many months I can actually survive. And what I mean by that is if everything fell apart today, how many months can I actually feed my family and know for a fact that we're good? How many months of cash on hand or anything do I have on hand? Can we sustain our lifestyle and move forward? That's a good number for me, right? But again, that's a different number that I track, but that's something I need for me internally to keep me focused on what I'm doing here and not shrink into scarcity. Does that make sense for everybody? So as you guys go through this process, you're going to figure out your own numbers that are important to you. Okay. Farmer Metrics is built to be your guys' books. The income statement, the cash flow statement, the balance sheet, this is really the government's books, right? Because the government's looking at your income statement. This is why you guys carry over grain and everything like that into the next year. And this is why just looking at your guys' income statements, you guys saying, oh, my tax returns last year showed I made $50,000. That's complete bullshit. That's the dumbest number you can look at because you can make your income statement look however you want it to. Okay, now we want to try to make it as realistic as possible, but that's why we have Farmer Metrics. Because Farmer Metrics, we're accounting for, okay, we're carrying grain over into January or February. Okay, this is what we're estimated to sell. Okay, we get to the end of this year, we have all this inventory on hand, and we see that, okay, if we sell everything, we're going to show a profit of $300,000. Are we realistically going to do that? Probably not. Because then we're going to have a $100,000 tax bill, which I know you guys don't want to pay that. All right. So we're going to carry that over. And again, guys, like knowing all this, the bank is never going to have to worry about you. They will never have to worry about you guys again. Because ask your banker to explain the difference between an income statement, cash flow statement, and a balance sheet. What do you think they're going to tell you? You think they even know? You think they have to look at their own personal income statement, balance sheet, and cash flow statement? No, they don't. They don't. I'm going to tell you, when I was in the bank, when I first got started, you think I knew what that stuff was? No. And I have a finance degree. So unless you've experienced this, you have personal experience going through and running a business, I'm not going to take counsel from you on how to run these financial report cards. I'm not going to take your insight on that stuff. So this is why we're trying to gear you guys up to be handling all this. Okay. So going through, we'll finish up this training here right quick and then, open it up for any more questions and stuff like that. But you guys need to understand, I wanted to show this visual representation here. Okay. So Ty and Tony, like we've been talking about, right? So at the end of your cash flow statement, right, you look at your bank statement for a month or for a period. Okay. So this one again is December of 2019. Let's say the ending cash is showing us $75. Okay, great. So on my balance sheet for 12/31/19, that cash account shows right up there under my assets. Okay, then let's say we have an earnings of $50 on our income statement. Okay, great. It's going to show up right there as current earnings under my balance sheet. Okay, let's say we transferred money again to our holding company to run our salary. Well, for Legacy Farmer, that's shown as what, Ty, on those books? What is that shown as?
Expense.
Part of the expense on the cash flow.
Nope. Because I'm transferring money up to my holding company, right? To pay my
Oh, that would be, wouldn't it go into like profits?
Okay.
Or I don't know.
No, you're on the right path here. Okay, so this is going to impact two of these statements. Okay, when I transfer money from Legacy Farmer up to my holding company to run my salary out of there, right? The rest of my team, their salary is paid out of Legacy Farmer, which on Legacy Farmer's books, that's an expense. I got payroll taxes I got to pay. I got all the other stuff I have to pay. Right, but all I'm doing is transfer money up to the holding company because I want clean entity structure and have all this stuff in place. That's literally, it shows on my cash outflows, right? My cash flow statement as under a cash outflow, but on the balance sheet, it's just shown as a shareholder distribution for Legacy Farm. That's all it is. Because at the end of the year, guys, all of the earnings, your current retained and shareholder distributions, guess where they're all going to flow up to? The holding. Yeah. So we have clean books and financial report cards for each one of the businesses down below, and then we have one comprehensive one for the holding company. Make sense?
Yeah.
Okay. But this is just how all of these things flow together here. Okay. So, let's see here. What was the next thing? Okay, so this one's a good one here. The one distinction you need to make is that earnings are not the same as cash. Tony, what do you think I mean there?
Earnings might not necessarily be profits.
Okay. Why? How so?
Well, the way I look at it is I can go earn money by selling a crop, but it still might not be profitable.
Exactly. Right. So we got to look at the income statement. Just because you're showing an earning on your income statement, you can't spend earnings, because there's a difference between your income statement versus what? Cash flow. Great. It's great if you had earnings, but if those earnings went to just pay back your operating line of credit, do you really have any money to spend?
Nope.
Nope. So that's why understanding the different types of cash flow coming in, operating, investing, or financing, that's why we have to understand those things too, because we can show, hey, man, this is awesome. Our tax returns show that we made $300,000 last year. This is great. Let's go buy the boat or buy the house or whatever it is. Earnings are not the same as cash. Spend earnings, only spend cash. That is why we have to understand the critical differences between these things. So cash, on the other hand, is fact, making this distinction. So yeah, that's the whole reason behind all this, is I want you guys to understand how each financial transaction decision you make impacts each one of these other statements. And ultimately, it's going to lead you guys into making just different decisions going forward. Okay. All right. And then next week, guys, what I want to get into is the 2 sets of books. Okay. We're going to go more into depth on our books and Farmer Metrics versus the other books, and what the bank needs and why we have to give them kind of this combination of both here, and just be keeping track of things. But anybody have any questions so far on this topic? That are coming up. Oh, John, go ahead. Let's get you unmuted. Go ahead.
Hey, Jace, there was a comment earlier about, like the bankers. One thing that I've done over the years, and I started out really small. My loan officer was wet behind the ears, knew nothing about ag. And I only used Excel. I created my own documents, much like yours. They're not as fancy and put together. But over the years, the good times, the bad times, we've always disclosed, no matter how good or bad it was, the situation. And, that relationship was built, and it also proved the truth in my numbers. To whereas now, if I wanted to push and ask for a $2 million loan, even though maybe Farmer Metrics says that I've got $800,000 or $900,000 available to go borrow, I know the good faith that I've built up over the time, even though we may be stretching a little bit, they're going to go out on a limb for me and it's always worked out. So I would encourage always, good, bad, indifferent. I mean, I try to schedule a lunch every couple months, and we go over numbers and where we're going, how my projections look, and it's been great. My banker has moved up, and now he's the guy that knew nothing about ag is the head regional guy for the whole region bank on all the ag stuff. So it's been a good deal for him and I to do that. And I know it's hard whenever you got bad news. You don't ever want to go see the guy that you owe money, but I don't know. That was my 2 cents. I just wanted to add that.
No, that's perfect, because a lot of, like what you just said there at the end, you never want to go see the guy that you owe money. Okay. But a lot of you guys have that kind of perception on your banker. You guys don't owe your banker money. You owe the bank money, but that guy there is an employee. You do not owe them money. So a lot of you don't walk into the bank, especially if you guys go through and you get really accustomed to this and understand this at a deep level. Like a lot of you, when you get a new banker, guess what? You're most likely going to have to train your banker. You're most likely going to have to train them on these things, how they all work together. I'm not even joking with you. Because a lot of these younger guys that are coming in, they're coming straight in from college. They've never ran a business. They don't know what all these statements mean. They don't know what the bank is looking at or anything like that. They just don't know. So that's why
And you
go ahead, John.
and you got to realize too that whenever they go behind those closed doors and those meetings and discuss your operation, I mean, they're your biggest cheerleader without you being there. So the more that they know, the more that they have the ability to sit there and speak as passionately about what you're doing, the better off you're going to be trying to get whatever done. And a lot of times if you don't speak up, they're setting up a loan that I mean, you're ultimately set up to fail. I mean, the way the structure is, and they don't know the production cycle. They don't know when you're going to need cash, or if you've decided the market changed and you need to, you need margin money because you're going to set a position, or you're going to set stuff in the bins and wait another 3 or 4 months. I mean, these guys do not understand that. And communication is crucial in order to set these loans up to where you're successful in, on the front end, rather than having to play catch up on the backside.
Well, and with some of you guys too here, going back to like what John is saying, like building that relationship is critical. And I've said this to all of you, and I know I've said this on calls before, but when they have that level of trust in you, that's when you get the grade A interest rates too. That's when they're willing to work with you there as well. And for some of you, 50 basis points, it may not seem like a lot, but on $2 million, that's a pretty sizable amount of money coming back into your guys' pocket that's not going into theirs in the form of interest. Okay. And it's the grade A customers that get the 3%, the 4%, the 5%. You guys updating them on a monthly basis, like I'm trying to train you to do, that is going to start building that relationship and that level of trust with them to where they don't have to worry about you. They know they're going to get reports from you. They know you're on top of things and that you're doing the work you need to do as a legit business owner. And because of that, they're going to be more open and willing to do more business with you. Okay. Makes sense, guys? Okay. All right. Paul and Lindsay, though, I wanted to get you guys' kind of takeaway on this. And then Chris, I want to jump into your conversation.
Well, ties into a lot what we're going through. And just talking with my old banker who left the bank, that my new banker, if he had a puppy, I want to choke it. It's just been a pain. And it just, that goes into farmer metrics and stuff. And it's like, I want to follow my old banker to the other bank, and they have a stupid non-compete and a bunch of things. And it's like, he's saying, hey, do you have 3 years of balance sheets? And it's like, yes, I do. And he's like, most people don't have that. And we've had a good relationship. I mean, from buying the farm, and like, he knows my operation. He's watching me grow through this. And I got to ask him what credit level we were. And he was like, you were a B- to a C+. And he goes, with the questions you're asking, you're on the way to an A really fast. And just how important this stuff is. So if that answers your question.
Yeah, no, that's perfect though, guys. That's why I kind of asked you to, because I knew you were struggling with it. I didn't think choking the puppy was going to come up, but no, that's honestly, that's kind of a pleasant thing compared to what half of you would honestly say about your banker right now. So, but that's the thing though, guys, is when these federal examiners go into the bank, every bank is by law, they're required to have a rating system and rating their credits. If they don't have it in place, the Fed is going to ding them. Okay, so you guys, that's why we're so focused so heavily on it. Yes, it seems like some of the stuff may be small. It's like, I really got to update them on a monthly basis or whatever it is. We're shooting to increase that credit rating. We're shooting to increase the trust and the power and leverage you guys have over them. Because when you're a grade A credit, guess what they don't want to lose? You as a customer. And if there's a competing interest rate or whatever out there, they're going to make sure they beat it because you're a grade A slam dunk home run for them that they never have to worry about. Pretty awesome when you're in the business of loaning money.